our food and industrial ingredients business in the United States and Canada. So again, the key messages for US-Canada in this particular situation is we have a strong position in mature markets, and we'll talk about that a little bit, but we've been able to deliver stabilized margins over the last several years through our trusted customer relationships and the strength of our business model, and we'll talk about that a little bit in a few minutes. We've been able to drive profitable growth through our expanded industrial product offerings. Jim Zallie touched upon this. We are the leader in US-Canada in terms of corrugating, paper supply, sustainable solutions for packaging. We have a #1 position. Our customer intimacy is second to none. We know that market very well, and it's actually growing. You think about everything that shows up on your doorstep today and food delivered, it usually has a packaging format in there. So we're very well positioned to tap into that growth and continue with that. And there's some solutions that we're going to bring into that area as well. We're going to look at our operational efficiencies. It's critical in this region. We have some very large competitors in the space as well, so cost is critical. Spending a lot of money and effort and resources around maintaining our margins, making sure that we have that customer intimacy and to have better supply to our customers. And then finally, this is I think the other side of this business is it delivers stable cash generation, right? And that fuels growth, not just for food and industrial ingredients, US, Canada, but that cash is used across the corporation, whether it's in CapEx projects, MA, or cost savings projects that we move going forward. So it's a good generator of cash that's used across the organization in line with our strategic capital allocation. So in this particular case, again, over the past several years, this business has performed extremely well. We've got a very unique position in the region, leading positions in dextrose and the only corn wet miller in Canada. You can see we have 2 Idea Labs, and then we have our 6 plants. We have our 2 plants up in Canada as well. Net sales flat, but again, somewhat related to the price of corn on that area. Gross margin percentage up 900 basis points, right, in the last couple of years, from 13% to 22%, and that was necessary. We needed to reinvest in this business from a reliability point of view and an efficiency point of view, and at 13% gross margins, that wasn't possible. We can explain a little bit on how that happened. And then on an OI basis, from 9% up to 17%. So really exceeded expectations. The team worked very hard together cross-functionally. Pricing center of excellence. We'll talk about raw material hedging and also our operations and supply chain delivering that. You see the product applications there. I think one of the other key things that we did is raw material volatility. This has been a bit of a problem, right? We're in a global market, soy proteins, dealing with corn, other things, global trade. We did a pretty comprehensive risk management evaluation in partnered with our finance team. And what we've been able to do through some different hedging techniques is reduce our exposure to commodity volatility. So we're not talking about dislocations between soybean protein and corn protein. We've been able to cross-hedge across other ways to protect that corn price and that net starch price that we have, and it's been very effective as we go forward. So again, delivering stable cash generation to fuel growth and support our capital priorities across the whole organization. So this is our mix. You think about we have a strong local presence with a diversified sweetener and starch portfolio. So by product, you can see the mix there. High fructose corn syrup, approximately 20% of our sales in US, Canada. And actually just for a company point of view, it's just slightly less than 10%. So yes, there is some exposure to that. However, we are looking at new ways to take that grind and use it for other advanced products. Locally sourced ingredients, so if you think about where our plants are located, they're closer to the customers, not so reliant on rail shipments and things like that. We can deliver directly from our plants using our trucks. As I'd mentioned, we've got a very strong leading position in the industrial business, and that is continuing to grow, and sustainability will continue to drive demand for those products. And again, upgrading that mix, right? High fructose corn syrup is a great product. There's nothing unsafe about it, but as consumer preferences change and demand levels change, we have to adapt and find new avenues for that stream, and we've been very successful at that going forward. So again, continuing to transform that portfolio, looking for pockets of growth to drive that will continue to maintain and grow our margins in the US, Canada region. So from an addressable market point of view, we think it's about a $10 billion market with a relatively lower CAGR of 0.9 to 1.3%. And this is just for this portfolio. And that's a line. It's a mature market, so we understand that. So the key factors that we're going to do to look at this is strategic diversification into the growth markets. We talked about biosolutions. Products like liquid dextrose for industrial use or food use and fermentation. Glucose shipments have actually increased over the last few years as well, offsetting the fructose declines. Sustainable materials, we'll talk about that in a second. Biosolutions, so this is replacing petroleum-based products in chemistry and other applications with corn. And then again, the sweetener side, trying to maintain stable, positive performance in other categories than beverage, like baked goods, confectioner, and ready-to-drink beverages. So our competitive position in U.S., Canada, we have strong market and customer presence. I think that's very important. We have a very focused go-to-market team in Canada and the United States, with a larger percentage of our business mix being smaller and medium-sized accounts, right? So they're dependent on us, not just because of supply of service and logistics, but also the innovation side as well. They tend to rely on us more versus some of the larger accounts, which are a very important part of our portfolio as well. But I would say our competitors have a larger position with them. We have the ability to react quickly to trends and customers' needs based on our plant locations. And again, continuing to optimize our portfolio. We're the leading supplier of food and pharma-grade dextrose, which is a very unique product to us. Corrugating and paper-making starches, and I'd mentioned specialized glucose syrups as well. So continue to optimize that mix based on the trends moving forward. So driving value through our service, which is critical, customization and agility, and continue to look for new opportunities to trade up. Similar to the past couple of segments, so 3 key areas of profitable growth. I'd mentioned finding those pockets of growth in this industry and finding where we can continue to trade up in those areas. Innovation, so delivering focused innovation and leverage our overall ingredient network. And then operational excellence, focused on cost and service and the optimization of that network, which keeps our competitiveness very important in the marketplace. So as we continue to shift that mix, I'd mentioned developing and scale a portfolio of plant-based barrier coatings and functional binders, and this is to replace plastic in the marketplace. I'll give you an example of that in a second. Accelerate the development of our next generation sustainable packaging solutions. And I'd mentioned innovation as well. Innovation goes beyond products. There's supply chain innovation, finance innovation. In this particular case, we put a lot of effort and resources into risk management to making sure that we have stability of our raw materials so we don't have all these predictabilities when we're reporting our earnings. So some of the trends that are in our favor here is paperization, right? You think of paper packaging. I've seen alcohol now in paper packages, right? So this trend away from plastics, even glass. Plastic reduction, right? Single-use plastics and PFSAs, which are forever chemicals. Those are an issue. The development of biosolutions. So this is using liquid dextrose and other starch streams to make green chemistry products that traditionally maybe use petroleum products. Looking at consumer preferences, right? Many people reading the label, not just what's inside the product or the package, but what's on the outside of that package. Was it made sustainably? Is it biocompostable? And then our local and reliable servicing. And again, corn starch and its derivatives is the perfect economic raw material source to drive growth and innovation in this segment. So we'll continue to use that moving forward. So again, we're positioned to meet the rising demand and needs for sustainable, bio-based, and locally sourced solutions in the U.S., Canada region. So just another example here is next generation sustainable packaging solutions. So supporting paper and packaged good trends with deep customer relationships and industry expertise. Again, we're supplying them with the majority of their ingredients today. And as they look to follow these trends in the solutions, they're going to rely on us, our relationships, and our knowledge of the industry to help that growth. Talked about chemical replacement, biodegradability, bio-based materials. We debated this one at 4%. I think we're being a little conservative. I think we're going to do better than that. But again, it's a growth segment. And sometimes in this segment, a lot of the news is around what's not growing. This area is growing, and it's going to continue to grow. And we're positioned very uniquely versus our competitors to be successful in this marketplace. Another example here is with replacing PFAS, which again are these forever chemicals. You've probably heard about them in soils and waters and things like that. So regulations are looking at how do you replace oil and grease resistant food packaging alternatives. And I think as we all know, New York City is probably a great example. Since COVID, pre-COVID, pizza was pretty much it. Now you can get anything delivered in food. Steak, French fries, whatever it is, McDonald's, right? Before there wasn't much of that going on. So one, that product integrity, how do you keep it hot, crispy moving forward? But again, how do you do it in a sustainable way to kind of balance, the performance that you need and the cost competitiveness? So some of the applications, think of a popcorn bag, pizza boxes, burger wraps, French fry sleeves, things like that, is where this application and coating can work. So our unique solution, we've got some modified cornstarch, which enables grease resistance in a paper packaging. No one wants to eat a burger if it's covered in grease on the packaging. And these are certified compostable modified starch that preserves package recyclability. And again, it can work through our plants as well. So again, we're allowing our customers to make these claims, 100% PFAS free, packaging with better compliance and sustainability metrics while still being cost competitive. And I think it's very important moving forward. So we see some big ideas in this area. We're making some investments in R&D and go-to-market resources to further capitalize on this growing segment in the US-Canada market. And then finally, on the cost leadership to support higher margins, right? So again, it's about cost, right? We don't add a lot of OpEx to this group per se, so we're very mindful of the costs that are invested in this area of the business. However, we do invest in cost savings projects, digitization, as Mike had talked about as well, and keeping our costs in line so we can continue to grow margins in this business. How do we streamline plant operations? Should we make this product at all 3 plants, maybe one of them, and get that mix so the plants can run more efficiently and operationally? That's important. You know, we didn't talk a whole bunch about customer order fulfillment and demand forecasting. We've done a really good job, and under our supply chain team with Eric, of forecast accuracy, right? So we give the plants what we want to make, we match it up with demand, and our levels have increased a lot. And that has a lot of benefits from cash flow, working capital, but also maintaining the right level of inventories for our customers. So that's a big part of it as well. Mike talked about rationalization, right? Do we need to make all these products? Every time there's a changeover, it slows down our operations. So how do we manufacture that and make it go forward? And again, the reliability side. We've talked about this. We have our largest plant in the world in Argo. We need to invest in that, and we need to make sure that we continue the reliability in that moving forward. So again, very well positioned to build upon the positive momentum today, but as we go forward, great opportunities for expansion as well. So our outlook here is about 0 to 1% CAGR on a revenue basis. Gross profit margins of 21 to 23%, so stable-ish, moving up a little bit in this segment, which I think is critical. I think there's been a lot of volatility in earnings for people in this sort of segment. This is our 3rd year of stabilizing, and I feel very good about the changes we've made that we'll be able to maintain and enhance these margins. Similar with our operating income, a very big part of our business, $373 million of operating income in 2024. So very cash-generative business. Very high return on invested capital with profitable growth in industrial product offerings. So just finally, just the key takeaways is, you know, that strong position in the mature market, right? And I think the criticality of this is delivering stable margins, which I feel very confident we will with the changes. Our growth through our expanded industrial product offerings, it's growing. We're positioned as the #1 person in that area. We'll continue to upgrade and bring our global solutions in. We'll look at our efficiencies that we talked about as well. That's part of our DNA. It's going to continue moving forward. And again, that stable cash generation, right? We're able to use that money to reinvest in other parts of the business as well as maintaining the reliability and debottlenecking within our plants today.